piece yesterday.
Yeah.
And for those of you who don't know or tuning in for the first time, we do this live. We take questions from you at questions@itmtrading.com. That's where you email the questions to. And then we read them to her live on air. She hasn't seen any of these, so you get a real, true, organic live response. Tom V. So far this year, there have been 89 bank failures, which is up from just 8 last year, 5 in 2016, and 8 in 2016. Now, I have not vetted this question to make sure that those are all correct, but 89 this year so far is what he's saying.
The FDIC.
Do you see this huge increase as a sure sign of impending economic implosion?
Well, it certainly could be an indication, but remember during 2008, there was a tremendous amount of consolidation. I would have to look at that before I would really make that statement. I think what's a whole lot more telling about an impending global recession, and I'm going to be talking more about this next week, but our yield curve inverted yesterday. China's yield curve inverted in 2017, and it looks like Europe's yield curve is getting ready to invert. So I think that is a way bigger indication. But I will take a look at those bank failures because I'd like to see, why, and maybe we can write that down.
Well, what I'm going to do is I'm just going to highlight it, and I'll leave this with you after the Q&A.
So let me answer that when I can give you a more accurate answer, because I really don't like to just go boom if it's something I don't know about.
Right. Okay, so Steve D asks, I'm interested.
Thank you for bringing that to my attention.
Yeah. Steve D, I'm interested in purchasing physical gold coins. In your opinion, is dollar cost averaging the purchases over a period of time an effective strategy?
Well, if you had started much earlier in the trend, I would have said absolutely, and it's certainly what I did because I just keep accumulating regardless of the manipulated spot price anyway.
And we should clarify when you say starting earlier in the trend, because earlier in the trend the prices were much higher, right? Now they're lower and we're more in that accumulation phase.
Well, actually, I started accumulating for this phase back in, I came here in 2002, June of 2002. And at that point, spot was somewhere around like 250, 275. So I actually was accumulating a lot cheaper than I am today. And then, of course, we had the big run, and I accumulated through that too. Because even at its height, even at 1,900 an ounce on the manipulated spot market, gold was still severely undervalued.
In terms of its fundamental value, for clarification.
Correct. Yes. So, dollar cost averaging, we just don't have the time now. I mean, so I'm more inclined to say build your position and get it done. I do not like what's happening. I do not like what's happening in the markets at all. I mean, been watching the volatility going up. Normally, once you have an inversion, it starts to become obvious like maybe 16 months after the inversion, but the reality is everything is so precarious right now, and this isn't just in one country or in one place. This is like, global creeping crud, okay? I mean, that's what's happening. So I can't tell you when it's going to become apparent to everybody, but that could frankly happen at any time at this point because of what's happening in the markets and the breakdown.
Right. So the net there is, if, in your opinion, if you can afford to build your whole position now, if you are limited by budget, naturally you're going to dollar cost average over time anyways.
Right, but still do as much as you can in all areas: food, water, energy security, the barterability, the wealth preservation, the community, the shelter. You want to go in all areas, but yeah, you need to get as much done as you can, whatever you can afford, whatever you have the ability to do. And if you're sitting in the stock market, I mean, do whatever you want, but I'm certainly glad that I don't have anything in there.
Yeah.
Because insiders are using any rallies to get out.
So that kind of rolls right into this next question because Wanda B asks, I'm a 62-year-old disabled woman who is single with very limited income. I keep my loose change when I can, and so will the loose change I manage to save be good in a reset? And how can I invest and to prepare for the reset on such a limited budget?
Okay. So first of all, if it's regular, normal new change, I mean, people will, for a minute...
post pre-64,
yes,
right? Post
yes,
60,
after
so
64.
1965 and later change, no.
Correct.
Yeah.
Because they're just base metals. They're, so it will be recognized initially, just like all in this country dollars, but the fiat money, before people really understand what's happening, it'll be recognized, but that's probably not really a good way to prepare. When you're on a limited kind of budget like that, there are still some things that you can do in all of these different areas. I mean, silver is very, very inexpensive.
Yeah, and you could buy what you were talking about, junk silver, in small amounts, small quantities, right?
Exactly. So that's a good way to do it. And even maybe a little bit of fractional gold, but keep in mind that gold and silver in any form is monetary at its base. So, if you happen to have some sterling silver flatware picture frames, or I have some chopsticks, actually, trays, whatever, understand that that is monetary as well. And there are, there can be some ways that you can accumulate that really cheaply. I've gone to lots. I don't think it's so easy anymore because a lot of it has come off the market. But, I'd pick it up for nothing at yard sales, what have you. And it may be a little more like that since the price has been so, depressed. So I would say do something like that. Food you can certainly prepare with food, rice and beans, that are dried, they'll hold, they're not very expensive. You can get them on sale. I would also probably look at getting involved in a local garden, community garden. Pardon?
You said get a vault at a community garden. What does that
No,
mean?
no, get involved.
Sorry.
Involved. No,
I
let you clarify that. No, get involved in a community garden where you're going in and you're working for your food and, and you get to harvest. So there are a number of different things that you can do. And frankly, toilet paper is great to barter with. Mm-hmm. So like I've accumulated extra toilet paper just for that. So there are ways to be prepared. Getting seeds, sprouting seeds like broccoli seeds, which are super nutritious, keeping them in your freezer, just buying like a pound or two of them, not very expensive, keeping them in your freezer. You put them in a little sprouting jar, put water on it for 3 days, and you've got live green food. So there are a lot of things that you can do on a very limited budget. And I suggest that you do them as best you can. And also, really if you can get involved with like-minded people like at the community garden, then that's going to help too, because there's definitely power in groups.
All right, so Gregory T asks, what are the pros and cons of storing gold and silver in a vault during a hyperinflationary scenario similar to Venezuela?
Well, I think it probably depends on the vault. First of all, I do not. I prefer to have my metals near enough for me to easily access them. Even if I had and I don't keep any more because I'm so visible. I don't keep them at my house anymore. I keep them in a private vault, which if I had to, I could walk to. So the advantage of a private vault is that's not all they hold, and chances are pretty good that they'll remain private in that vault. You just have to make sure you can have access to them. And in a bank vault, that would not be a choice that I would make. But so I don't really quite know what to say about that.
Bank closure, you're not getting into it.
Right. And not only that, but if the government chose to look inside of those bank safe deposit boxes, they are not, there's no barrier there.
Yep.
No barrier. So whereas with a private vault, they hold a lot of different things. So it would be more challenging.
Right. Okay, so Damien P asks, I have a...
But I'm sorry.
okay.
Let me just kind of say one more thing about it.
Mm-hmm.
When I was not so visible, my personal preference was to hold it in really hidey holes, a whole bunch of them around my house that were really illogical. And we have a one sheet on some of those options because obviously that's the easiest to access. So I don't do it because of my position, but we do have that one sheet that around here somewhere on where to hold. So that's another option for you. If you remind me, I think I have access to that pretty easy on my somewhere in my
stuff.
stuff.
If you have it, then we can post the link to it.
Okay,
put it up on the blog and post the link.
I'll get that. I'm like 99.9% sure I can access that pretty quickly.
Yeah, a lot of our viewers over time have suggested, not because we're on air talking about precious metals and holding it and that kind of thing, that we do not hold any in our physical possession. So that is absolutely something. And former retired police officers and former retired CIA, so have told us. So we do not hold anything anymore in our possession. So, but
in our homes,
if other people don't know that you have it, it's a lot. It's safe. You would want it as close to you as possible, for sure.
Exactly. You want easy access.
Okay, so Damien P, I have a legitimate concern. I'd like to own gold and silver, but I am unsure what to do if the markets collapse. People say you are protected by owning gold, but I feel if the markets crash like the early 1900s, I will be holding coins that nobody will care about. What value will it hold?
Well, that's a really interesting question, and people ask that a lot. But here's the thing about physical gold and silver. Not spot, not whatever, which is easily manipulated. But there is complete global demand across every single aspect of the economy. So it's in the financial realm, it's also in the manufacturing realm, it's in jewelry realm, it's in food, it's in medicine. I mean, it's in electronics. Both of those metals have qualities that they have not been able to duplicate. So the question, when nobody wants it, it doesn't make any sense, because there is 100% of the time demand. Sometimes more demand, sometimes less demand. But that's what people really need to understand again. That's what central bankers understand. Mm-hmm. That's really why it holds its value, because there's always demand. The opposite is true for fiat and fiat products, who by design, they are designed to lose value over time until they are worthless.
Well, and one thing that I always notice that I think people overlook in regards to this same question is that maybe you're not going to do anything with it during the reset. Maybe you're just going to hold it as real money throughout the reset until we get to the other side of it, and then convert it to, you might be converting it into the next, whatever the next fiat currency or whatever the currency might be, because that will hold. If you have dollars pre-reset, go through the reset, dollars coming out the other side likely not to be worth much of anything, right?
Inside of the reset, right?
But if you go in with metals and you hold them, we come out the other side of the reset, we're looking like we're on some other kind of side of the recovery when they've done something else with the currency, whether it's SDR, whatever. You can take that physical metal and convert it into whatever the new currency is, and hold that value that you had before, transition the whole thing, and come out the other side with the same value.
Yes, value in terms, actually probably greater value in terms of purchasing power, but inside of the strategy and based upon the historic norms and the historic patterns, there's actually utility for it throughout the reset.
Yeah, for sure.
Right? But I mean, yes, if you didn't